Good evening once again. I'm Amos from Future Pip Limited. Future Pip, we say trade profitably. Future Pip is a true African ECN STP brokerage firm. Honesty and integrity is our hallmark. You can also visit us or go to our website on www.futurepipfs.com, or you visit us on our Facebook page. That's www.facebook.com/futurepip. You can also follow us on Twitter on www.twitter.com/futurepips. If you've got any complaint or any question you want to ask us, just forward it to support@futurepipfs.com. Today we want to look at forex analysis. Or forex trading analysis. Now, as a trader, before you trade, you need to analyze the market first before you trade. Otherwise, it means that you're just going in for gambling. When you just close your eyes, just place a trade, buy or sell. When I make it, I make it. When I lose, I lose. No, it doesn't make you a good forex trader. For you to become a very good forex trader, you need to really analyze the market and see when and where to take a trade. So I'll take a few minutes and take you through the two major analyses in forex trading. We have the fundamental analysis and also the technical analysis. Let's take it one after the other. The fundamental analysis. This analysis is the application of micro and macroeconomic theory to FX markets to predict future trends. Thus, it is simply the use of economic news releases to analyze the market. So the fundamental analysis is just about studying or listening to what's happening in an economy, okay, or in a nation's economy, and then using that to analyze your forex market. Below are some key economic drivers or indicators of forex rate. We have one, trade balance. There's a difference between the nation's exports and imports. When its export exceeds its imports at the end of a defined period, there is a trade balance surplus. Also, if its imports rather exceeds its export, it gets a trade balance deficit. A surplus will cause its currency to appreciate against other currencies it's pairing, while a deficit will weaken its currency. Interest rate. The inflow of investors depends on the level of interest rate. If an economy's, that is its central bank's, interest rate on investment is high, it will attract more investors, boosting its economic activities and strengthening its currency. Low interest rate level means less investors and weak economy and weak currency. What this one means that investors are just moving up and down, just traveling across the globe, searching for a better economy to invest in. So if I know that a return on my investment would be great in an economy, I just go to that economy and then invest in it. So when your interest rate as an economy is very high, it attracts more investors too. So now you understand why people choose to invest in certain countries to other countries too. We have gross domestic product, the GDP. This is the broadest measure of aggregate economic activity. A high GDP figure comes with expectations of high interest rate, which is positive for a country's currency. A low GDP figure means low interest rate and weak currency as well. So when the GDP is high, it means that at least your standard of living as an economy is great, or is doing well, it's okay. But when it's low, it means that the standard of living too is very low. Now, talking about accommodation, food, drink, shelter, so on and so forth. Non-farm payroll. Non-farm payroll is an U.S. economic indicator. It is usually released every first Friday of the month. So every first Friday of the month, we have the non-farm payroll news release, and this U.S. economic indicator actually plays major role or have a high impact in the forex market too. So I'll just say be careful if you want to trade based on, or you want to trade on non-farm payroll news release, because it can either hurt and it can also heal too. So any which way, just be careful trading with that news. There is a report on the measure of the number of people being paid as employees by non-farm business establishment and units of government. Large increases in the payroll employment is a sign of strong economic activity, hence strengthening its currency. Other economic indicators are consumer price index CPI, the housing start, the producer price index PPI, inflation, and so on and so forth. If you want a daily news, daily economic news, you go to forexfactory.com, and then you have a daily economic news. It's a calendar of what will happen tomorrow, the next week, the next month, next year, and so on and so forth. Yeah. Now, application. When a currency that has a base appreciates or strengthens against other currencies, traders tend to buy more. Also, when a currency depreciates or strengthens against other currencies, traders sell more of that currency. What it means is that when there's a news release in a particular currency, let's say euro, and then euro tend to appreciate or strengthen against USD, which is pairing, then traders will buy that currency pair because euro is base. But when the news on euro actually portrays a depreciation on that currency, that's euro, traders also tend to sell that currency pair because still euro is the base. So just get it straight. So for example, on euro USD pair, if a news release shows strength on euro, traders buy the currency pair, and when it shows weakness, traders sell the currency pair too. So let me just take you to the platform and then show you what I mean here. Yeah, so there's it. So when assuming there's a news release, euro USD, and maybe the news release have high impact on the currency or is strengthening the currency, means that this currency, the euro, has appreciated against the dollar, so traders tend to buy more of the base, so they buy the currency pair and make profit. Remember, when you buy a currency pair when market is moving up, you make profit. When you sell, when one market is going down, you also make profit as well. So that's just it. Okay, now technical analysis. This is using and reading charts to predict future price movement. Traders who read and study charts to make decisions in the FX market are chartists. Chartists do not care about economic news release, but rely on certain technical indicators in position taking in the FX market. Now, it's either you trade on fundamental, or you trade with news, or you trade with technicality, you trade with technical analysis. And these people who trade technical analysis are those who read the charts. They don't care about what's going on in an economy. DS is just looking at the chart, looking at the platform from morning to evening, from Monday to Friday. They just look at the charts. They read the past, the present, and then they also speculate or predict the future. That's the future trend. So these charters, they don't care about economic news releases, but they rely on certain technical indicators in taking position in the market. When I say taking position in the market, it's either you buy or you sell the currency pair. That's it. There are many technical indicators used in the forex market, but I want to talk about two major forms of technical analysis used in the forex trade: the trend and then support and resistance. We have so many indicators in forex trading, so many. I tell you, I have so many. Okay, but all of them, I'll say the trend and support and resistance is a pivot of all of them. The market will always be trending. The market always hits the support and the resistance. Yeah. So always market is trending or market is on support and resistance. Now let's take it one after the other. The trend. Now trend simply means the direction of the market, which way it's moving, either uptrend or downtrend or sideways. Trend is the most important part of technical analysis, and traders first consider the trend of the market before taking a position in the market. So before anybody want to trade that's using technical analysis, that fellow will actually look at trending first. When market is going up, you just buy, you make profit. When market is going down, you sell, you also make profit. It's so simple as that. So we have three major trending. Okay, market will either be trending at this point in time, will be trending up on the uptrend, or be on the downtrend or sideways. So this is an uptrend market. So there is it. So market moving from here to here is an uptrend. Okay, from here to here is an uptrend. From here to here is a downtrend too. Now an uptrend doesn't mean that market will sell a little bit. There will be a little drawbacks, but at the end of the day it's an uptrend. Downtrend to mean the same. Doesn't mean market wouldn't pull up a little bit. Market will pull up a little bit but still sell. This is ranging market. Ranging market means that market hasn't either gone up or down. So market goes up a little bit, it comes down a little bit. It goes up, it comes down. So market rises and market falls. Rise and fall, rise and fall. Not so great. Yeah. The trend is your friend, as the saying goes. Always follow it and don't go against it. You see, you can also check on our video on how market works, and then introduction to forex and know how market works. You know, it's so simple. When the price of currency pair is moving up, you just buy and make a profit. Okay, and also when the price is falling or going down, you just sell and also make a profit. So it's so simple as that. Okay, so simple as that. So you always say let the trend be your friend. Okay, don't go against it, because immediately you start going against the trend, you make losses, and that's what I don't want you to be making. No, I don't want you to be making loss after going through this lesson. Now I want to look at support and resistance. So let me take you to the platform. Let me take you to the platform, and then you see so there's the uptrend. Okay, and there's a downtrend. Okay, market goes up from here to here. Here to here is an uptrend, and so on and so forth. See, so yeah. So that's the trending. That's the forex market, the trending. Okay, we now talk about support and resistance. Market will always hit the support and market will always hit the resistance. Let's see what a support means. Another important part of technical analysis is support and resistance. The level of support is seen whereby a currency pair is seen as unlikely to immediately push lower. Also, a level of resistance can be seen when a currency pair is seen as not going further higher at the point in time. So this is a support, this is a resistance. So you have a support here, down here, you have a resistance here. Now what does this one means? This means that when market is going down, okay, it gets to a point in time, it doesn't move further down and start moving up. So it becomes a support at that point. So at this point there's a support here, the same point another support. So this is a strong support. The same way to market is going up, it gets to a point, it's refused to move up again, further up, and then it start moving down. So this place becomes a resistance, this one too becomes a resistance too. Yeah, we have further support and resistance. These are all support and resistance. So let's go to our platform. So there's it. So on the platform, let's see if we can identify some support and resistance here. Okay, so here's it. You have at this point market hit here and couldn't move up again. This point to hit here too, couldn't break through. So here is our resistance. The same way to apply to support here. Market is going down, or yeah, it gets to a point and then it doesn't refuse to break further below, it becomes a support. It gets to this point to refuse to break further below, it goes up a little bit, it comes down, refuse to break further below. So this level I can say is a support level, or level of support. This one too is a recent level. So just get it straight. Great. So always be ready to make move when market hits its support and resistance, whether to continue to buy or to sell or to go in the opposite direction. What it means is that when market is here, market on its support, let's say the support first, always when market hits here, be ready to take a buy, because maybe you're on the sell and it hits its support. It's telling an indication that quit the sell or quit selling that currency pair and start thinking of buying. The same way to apply here to when market is going up, you get to a point of resistance and tell you that you need to quit buying that currency pair and consider selling too. However, market can break through this support and go further down. That's where you join the sell. Market can also break above this resistance. That's where you go further up and then you join the buy too and make profit. The most important thing here is that we just want to make profit. We're not writing any exams, we're not doing something for somebody to applaud us or to appreciate that. No, we just want to make profit. So just follow the trend and then we use support and resistance to also trade too. So always be ready to make your move when market hits its support and resistance, whether to continue to buy or to sell or to go the opposite direction. If you want more on this one too, you can go to our website. Here we have technical analysis. There's a website, okay. Yeah, we have technical analysis, fundamental. You can just read more on it. You can also go to www.forexfactory.com, have more fundamental news too. You go to more sites and get your technical analysis too. So